So I totally disagree with this. You know, earnings are coming down very, very quickly. I totally agree with the description, unmitigated disaster. I think he meant really bad quarter. What I think here is that this was really the beginning of the end of the Tesla bubble, which probably arguably was the biggest stock market bubble in modern history. I actually think the company could go bust. And because
You think Tesla could go bust?
Yes. Because you have to explain that, I have to reverse. What was the Tesla business model? 3 elements. Number one, for 10 years, they've said 50% annual revenue growth. That has been valid up to January. Second, integrate vertically, so you capture all the value from the car sales. Third, direct sales, no value to any retailer, etc. That's a brilliant model when you grow, because you have negative working capital, so you actually get paid for growing, and you capture all the margin. The problem is, when you go in the reverse and sales go down, it also goes in reverse. You have all the fixed costs, which you have to spread on a smaller volume. And you also have the fact of that you have your negative working capital unwinding. So I think that the real shocker for the market here is going to be the actual numbers, which come in 2.5 weeks' time. Because the market is thinking 2 billion positive cash flow. Is going to be minus 2 billion cash flow on my numbers. Next thing, I think most of the knives, etc., are believing that this was a bit of a one-off, and relating to what you said about arson attack or whatever. You know, let's face it. How does record high inventories go together with production problem? This is a demand problem. And it's a demand problem for a very simple reason. They are really selling 2 cars. Model 3 introduced 2017. Model Y introduced 2020. This year alone, Volkswagen, as an example, is introducing 30 new cars, the majority of them being EVs. Competition is heating up. They have no new car until they say end of 2025, but more likely it's like 26. So what I'm saying here is that you had 9%, 8.5% year on year down on number of cars sold, and 20% quarter on quarter. I don't see any reason whatsoever to see any recovery over the next 2 years, given that these models are stale and given the economy is not rocketing. And so if you take, I'm having on quarter next, in 2 weeks' time, I have around 30 cents of earnings. Sure. Do that times 4, you're at 140. On a no-growth stocks, you should be at 10 times earnings. 10 times 140 means $14. That's probably a fair valuation. I think, however, Tesla cannot be at $14 if it falls under a certain level, because everything which been going on is going to go bust. You know, you have so many cases of the lawsuits, class action. You know, either it's full safe driving, either it's the board, etc. So I don't know where that level is, but let's say it falls below 50. All that is going to play out.